how Fireblocks works. Where are you in the stack, and what use cases are there?
Yeah, sure. So we basically help people with, or help company and businesses with two things. One, to provide them a secure custody and storage. So we provide custody technology for clients to store coins and digital assets. The second thing that we do is that we help them to transfer those assets and to sell them in a very efficient and secure way. And the third thing that we do is that we help them with issuance. So basically bring traditional assets such as, for example, regular currency into stable coins, securities, and so on.
So the volatility obviously has been the story of the last few months after soaring to records. Now we're seeing this pullback. How has that impacted you? How has that impacted where you plan to take the company?
Yeah, so generally speaking, because we actually sit in the settlement layer and because our business model is somewhat tied to the transactional nature, volatility is usually good for us. So in May, that I believe was the most volatile month, it was a record month. We sold about $180 billion of on-chain transactions, which was just a record for us. But overall, we're just seeing the activity around cryptocurrency and around digital assets increasing continuously. So of course, there is sort of the volatility in the market. But if you look at the trend, the amount of participants, the amount of volume, the amount of transaction just continues to increase. Also, the amount of unique wallets continues to increase. And that is just generally speaks to the adoption or the propagation of this technology into the general market, into the mass institutional market.
So speaking of security, obviously it's very important when you've got these private keys involved. You're being sued by a staking company, Stakehound, over $76 million in Ether. They say you lost. They claim that you deleted the private keys and then didn't back them up. Can you give us an update on this lawsuit?
Yeah, so this is still being worked out in the court, but I think, as we mentioned earlier, unfortunately, this is like factually incorrect. We didn't lose their keys, and they're still using their wallets. There was a different experiment that was done over there, actually around staking, in a very experimental side of the ecosystem, where people are exploring new technologies. And over there was an issue that was related mostly in terms of how the service was consumed by them, and obeying the protocols in something that was very exploratory. But something that is probably more important to really stress, I think that generally speaking, the technology for custody and securing wallets is really mature, and especially as people are really using the infrastructure, our infrastructure, or competing infrastructure to store cryptocurrencies, we already know how to make sure that it's protected from insiders, protected from cyber criminals, and so on.
So, I think stories like this add to the fear that some traditional investors, individual investors have in getting into cryptocurrency. There's this perception like if you lose the private key, there's no other option. You lose your money. I mean, how do you sort of quell that kind of fear?
Yeah, so I think that there are a couple of, first of all, there was a huge technology advancements over the last couple of years, where we were basically able to remove the single point of failure and the single point of compromise around the private key. So for example, what Fireblocks does, and some of the other companies are using, is a technology that's called MPC, or multi-party computation, that basically distributes the private key among multiple participants and among multiple servers, that even if one of them basically fails, there is a sufficient amount of redundancy that allows you to recover. That's one thing. Another thing is really the fact that there is more and more insurance capacity that allows you to secure this. And I think that the protocols, generally speaking, are well understood. So it's true that this story specifically was a bit described in a way that is, contributes to the misconception, right? But specifically, it had nothing to do with the wallets or the custody of the technology, and much more related to the usage of some Ethereum 2 smart contract that was involved over there.
Michael Saylor, the CEO of MicroStrategy, was on the show last week. Obviously, he's one of the most bullish folks on Bitcoin out there. The company, has made $1.4 billion in profits on its cryptocurrency on paper. But he says he's never going to sell. To think about holding Bitcoin like holding property, something that you pass down over generations. What do you think of that idea, and how does this space evolve, given that the volatility is still scary for some investors?
So I think that there is one question around basically Bitcoin, right? And I think that MicroStrategy was very bullish on specifically Bitcoin and the view of Bitcoin as something that is digital gold, right? I think at Fireblocks, what we're really looking into is the ability for the technology really to serve a much broader, for much broader use cases, right? Around replatforming and innovating of just financial infrastructure. So the areas that we are excited about beyond just buying Bitcoin as a reserve currency, right, is around digital payments, right? How that innovates and allow people to do transatlantic remittance and things like that, digital securities, clearing, and so on.